Hello, guys. My name is Gavin Panu. Welcome to M Trading's weekly webinar. So to start off, just like to make announcements as it's Black Friday and there are a lot of incentives at the moment. Currently, we are also offering an incentive. So our bonus structure, when you deposit into a live account, will give you an additional amount to be able to trade with. So it starts off with anything up to $1,000 gives you 20% bonus. Up to $2,500 is 25% bonus. Up to $5,000 you're looking at 30% bonus. Up to 10,000 you get a 35% increase bonus, and then up to 20,000 you look 20,000 US dollars, you're looking at a 40% bonus to that. In addition, we are also giving away the new iPhone XS. It will come with 64 gigabytes worth of memory, but to participate you need to deposit up to $5,000. So you need to deposit $5,000 or above, to be fair, and then it needs to be done within a certain time period, so the 10th of November to the 10th of December. And the aim is if you trade up to 200 lots of during that 1 month period, you are likely to receive a new phone, guys. Okay, let's go back to this webinar, guys. Let me just point out that if you want to make any inquiries, you can also put a message in this chat here and we'll get back to you. In addition, speak to Nick Johnson, guys. So his email address will be added to the chat, but it's nick.johnson@mtrading.com. Okay, good luck, guys. So, part of this webinar is that we are going to cover specifically a trading system. So the trading system I am going to cover with you is called the Holy Grail system. This is what professional traders have used for many years, so it is highly respected in the market. So there are a couple of things that you need to know. First, it is based on secondary indicators. So for people that don't really understand sort of support, resistance, trend lines and so on, this is the setup for you. This is that trading strategy for you. But I would add primary indicators, support, resistance, trend lines, and so on to this because it makes it more your own strategy. So the idea is take this strategy as a outline, as a template. Then your aim is to modify it to improve it towards how you prefer to trade. Yep. So I'll give you the guideline. You need two indicators. So the first one is the one that you see in front of you, which is a 20 period moving average, this one here. So this line that we're looking at over here, this is a 20 period EMA, so exponential moving average. Exponential generally means it's giving more weight to current price action. So that is the first indicator. The next indicator you require is the ADX. So the actual system itself is called the Directional Movement System. So the actual is called ADX, set to a 14 period. We're focused on this black line, as you can see over here. So this black line is our primary indication, and then you have your the DI plus, this is the DI plus, and this is the DI minus, which gives you either a positive or negative view into the market. The ADX itself, as I've covered previously, tells you whether there's a trend currently. So that gives you an indication whether there is a trend currently. So when you put them together, the ADX and the DMI, it is called DMS, or Directional Movement System. So, okay, those are the two indicators required. Let's move on. So how do I go about this setup? So this setup is straightforward. The first key point is, let me just remove all of this. So the first key point to mention is that you need a trending market. The market needs to be trending in one direction. It could be uptrend, it could be a downtrend, but you need a very strong trend. And what are we looking to do? We're looking for a trend to be intact, so there's got to be a prior significant trend, and we're looking for the retracement. So when you're looking for something like this is the trend, we are looking for these areas here, and these areas here. So this is this move up, is known as impulsive move, the impulsive wave. This is the corrective wave, the correction taking place. Next one is the next impulsive move, and this is the correction wave. So we're looking for the retracement to take place. Yep. So as we progress and the trend is intact, when a correction is about to take place, we're looking for a slow and controlled contraction to your 20-period exponential moving average. Yep. So similar to we're seeing this explosive move taking place, and then we look for slow and corrective retracement, which is this bit here. Yep, so this bit here is a slow and corrective retracement taking place, and we're waiting for the turnaround, the breakouts, as this. So the breakout to the top side above these ranges here. So you're looking for that continuation to take place. In addition to that, how do we use this system? This system, the first key point is that you need the ADX. You want the ADX to be above the 20 level. So you want the, assuming that this is the 20 level, as soon as you have that indication that we're above this 20 level, that shows you that the market is currently trending. In addition to that, you need the positive cross of the DI, so the directional index. So this DI over here, as you can see, it's above the negative DI, which shows that the bulls are in control, not the bears. So that is the process there, guys. So this gives us a good indication of getting in on the retracement or the breakout or the previous high, but it's looking to get into a already strong trend. Yep. So our aim is one of the key quotes mentioned over and over again is the trend is your friend. So always trade with the trend, and this is the perfect strategy to look into. Yep. Okay. So let's move on from this example. Let's do a couple of more examples. So what I can do here now, guys, is just zoom out. So I'm going to zoom out to, let's go to, I am currently on the Dow Jones. Yeah? So I'm looking at the US 30, looking at a smaller time frame. So I'll give you an example of a smaller time frame. Let's go to a larger time frame. Okay, here's a perfect example taking place currently now. Yep. So let me just slide this along to that side. Okay, so what we're seeing over here, guys, the first key point, as I mentioned as usual, yes, we need that strong trend. So we have the strong trend taking place. Also, you want to see how well the moving average is being respected. So you can see this area here, all of this area here, in addition to this area. Okay, we did break through this level, but it happens. Yep. So that's an area of consolidation taking place at this point over here. Yep. So some convergence taking place before you have the breakout. So the breakout takes place, and then so another pullback here, and most recently in this area here. So you can see that previously it's been respected multiple times. Our idea is look for the breakout. So the first initial breakout was in this area here. So when we break out through this level, so we break out through this level over here, and in addition to that, we'll also break above on the ADX. So you can see the ADX being in this range here. We're looking for that breakout to take place and the positive above the negative. So this gives us our first indication to look for that buy signal. Yep. Stop loss, ideally place it below the previous low, and you want to trail. You want to trail as you progress. The next one, as you can see, another slow and corrective retracement back to that moving average. Then we had the breakout, so the breakout takes place. And we're now seeing that turning point, and this is an impulsive candle that's breaking out to the top side. Yep. In addition, I'm waiting for this to turn around, dip to the top side. So when this dips below and then dips back above, so it turns around, that will be my indication to go long. In addition, with the green line, the DI positive, to cross further, so to be more bullish. Yep, so more bullish, and this to be more bearish. That will give me the additional confirmation to continue in this, to look for a long position. So slightly early right now, guys, but there is a potential trade setup here now, guys. So this trade setup will allow you to get in on the pullback and trade in the direction of the major trend, which is in this direction. So that's a perfect example of the Holy Grail system. And let's go through it, guys. Let's go through another example. So I can go through another chart. So we're looking for trending. So would you call this a trend, guys? Would you call this a trend? let's start off from our first, our lowest low, and that's the next high that it goes on to. Yep. And then where is a higher high or higher low or lower low or lower high? Nope, we don't have that. So it's within this range. So therefore, these highs, the market is ranging. So the market is currently ranging. So therefore, our system will not apply. That's the key point there, guys. When the market goes sideways, our system does not work. Okay, let's move on from there. Let's try another potential. Okay, so we're looking at another asset over here. So let's just move to this end. Again, on the daily time frame. Again, this can be applied to any time frame you wish, guys. So there is no limitation on the asset that you want to use. Here's an example. Here's a good example here. Okay, so let me just look for that example again. Okay, so this is a perfect example here. Right, so originally that is the uptrend. The uptrend, you have your breakthrough, so that breaks through. So price action breaks through that moving average, breaks through the moving average, gets to this low. From this low as a pullback to your moving average. That is key. That is key. Yeah. In addition to that, you're looking for the next sell-off, and that continues. So do look for that impulsive move down, and then a corrective retracement taking place as this. And as it weakens in this area, you're looking for the continuation further in that trend direction. So let me just add. Okay, so. Okay, now I'm going to add this. So in addition to that, so that pullback, as you can see, there's a pullback taking place. As this pullback's taking place, we're seeing the break through this level. You want to enter through the break of this previous low. That will be your entry point. Stop loss staying above the high. You want to target the height of this. So you take the height from this high down to this low, project it from the breakout, and that will be your projection down to this low. In addition to that, we can see the turnaround starting to take place. So you can see the turning point in the ADX, the average directional system index, is breaking through this level here. So we want to break above to continue that trend. Yep. So it needs to be above a certain level, which is usually the 20 level. Okay, so you have the pullback, continues, and then from here, yep, a slow and corrective retracement. Slow and corrective retracement, and from there rejects the moving average, over here and over here. Yep. So it rejects these key levels and then continues again. Another continuation from here. These are impulsive candles taking place. Yep. So ideally, with the continuation move, that impulsive wave that you're looking for, all of these candles are larger. Look at these candles; they're significantly larger candles. But on the retracement, you're looking for these slow and corrective retracements to take place. Yep. Again, there's another significant sell-off and continuation. Small retracement. Another continuation there. So that is the process here, guys. If you're looking to trade with the trend, yep, so if you're looking to trade with the trend, this is the perfect system. Not only allows you to enter when price action breaks through the moving average, so breaks through this moving average, but also how to add into the positions also. So each time it pulls back to that moving average, that is where you can look to add in another position. Yeah. So remember your stop losses. Your stop losses are always placed above the moving average and above the previous swing. So always remember to do that. So you're looking at stop loss above this high, above this high, above the high, above this high, above this high. So above the moving average and above the swing high. Your target aim should be the prior move. So if this prior moves from this point down to this point, you expect the next move to take place from there. So on the breakout, down to the next point. So you're looking for an A, B, C, D pattern to take place. So A down to B, retracement is to C, and then a completion. Yep. So if we're looking at 100% move here, you're looking at a pullback that's taking place around 50%, and then a continuation, another 100% move down to your D. Okay, so guys, do apply this strategy. So this strategy allows you to cover not only technical analysis but secondary indicators. It's a thorough system, so it allows you to add and it's very simplistic in the way that we're using only 2 indicators at the moment. Yep. So there's only 2 indicators required. It is a 20-period exponential moving average, and we use a directional movement system. Yes, that's all. And in addition to that, do define a trending market. The aim is to go with the trend. Okay guys, that brings me to the end of this webinar. We will be covering another trading system next week. If you have any suggestions, please do let us know. But yep, have a great trading week. I'll be back with you soon. Bye-bye.